Welcome back to Turning Hard Times to Good Times. I am your host, Jay Taylor, and I'm really pleased to have Gwen Preston with me again. Gwen is the Resource Maven. She has a considerable amount of experience covering junior mining companies as a journalist with the Northern Miner, and has also worked along with Marin Katusa at Casey Research. She now writes the Resource Maven, and she does an excellent job of covering those companies, and an equally great job, I would say, of speaking about them at the Metals Investor Forum, where she will be once again on this time on May 24th and 25th in downtown Vancouver. Whenever possible, I like to listen to Gwen when I go to these events. We're usually very busy, but it's always a pleasure listening to her because she's a very good speaker. She knows her stuff. She speaks spontaneously, and she's just really a good friend of mine that I've learned to know at the Metals Investor Forum. She'll be there along with other speakers like Eric Coffin, Greg McCoach, John Kaiser, Joe Masmader, Jordan Roy Byrne, and David Forrest. So thank you, Gwen. I'm really glad to have you with me again. Thanks for joining us today.
Thank you so much for having me, Jay.
It's just always good to talk to you. There's 3 stocks, I think, that we want to talk about today. Are you inviting all 3 of those to the Metals Investor Forum?
I am, yep, for sure. They're all three that have been in my portfolio for varying periods of time, but I kind of picked 3 that I'm particularly excited about right now, and also that are sort of at different stages in the project trajectory.
Indeed, they are. The most advanced one, let's ask you about that one first, is Orezone Gold Corp. Trades in Toronto under the symbol ORE. You can buy it down here in the States under ORZCF. 212.3 million shares. I saw it at 42 cents in Canadian money earlier today, giving it a market cap around $89 million. They have a project in Burkina Faso. That's the Bomboré gold project, I believe, Gwen. And I believe they own 90% of it. Is that right?
Yeah, so, Bomboré is, I think, how most people say it. And yeah, it's in partnership with the Burkina Faso government. So that's the 90% versus 100% aspect. But yeah, it's interesting when you say their current market cap. This stock is down considerably over the last year. And that market cap, to me, sort of captures the state of the mining sector right now, the lack of interest in the mining sector, because Bomboré is a phenomenal project that is permitted to be built into a mine, and that probably will be a mine in a pretty short period of time, less than 2 years, 18 months to 2 years type time frame. And it's not going to cost a lot to build, has a very high rate of return, better than 40% rate of return, has incredible expansion potential. This is the kind of asset that would usually attract immense attention. If the market was any stronger, it would attract immense attention. And the fact that it isn't is a large part just because the mining markets are not getting the attention that we want them to get these days. But when you have a management team like Orezone has, they don't stop just because the market has decided to look elsewhere. This is a team. The team here is a really important part of the story. This is a team who collectively have built 13 mines. They've inked 19 M&A transactions. They've secured 10 project debt deals. They've raised $2 billion in equity, and they've operated 10 mines. So these guys are planning, financing, building this mine, and they're the guys who you want to be doing exactly that. And they're full steam ahead with that process right now. And I applaud them for that, because what they're doing is building this mine that's going to stand out as a new, high-margin, low-cost mine in a gold market as that gold market gets going. So I think this is an incredibly undervalued opportunity right now. And for those who are interested in investing, both of the potential outcomes here work well. And what I mean by that is either Orezone gets taken out because a mid-tier or major gold miner looks at them and says, this project is too good to be true. It has this big expansion opportunity. We need to own this asset. So either they get taken out, or this incredible management team with such deep expertise in building and operating mines builds and then starts to operate this mine, which would also work out well for the share price. So I really think that it is well protected, and the price is a bit unbelievable. I'm not going to say that it's going to shoot up tomorrow. They're in the process of building a mine, so that's a bit of a grind. But what's really important is that this asset is permitted. So we're not in the middle of a permitting process. It's 100% permitted. They're just relocating a village and about to start building the mine itself. And so the really big hurdles are out of the way, and this thing is ready to start rolling.
Okay, so the financing is always a big issue for companies, and they're really a rare occurrence here because they have the ability to operate it themselves, which gives them some leverage over many and most of the companies that you and I know up there that are able to perhaps to find a viable deposit, but then they have to wait for someone else to take them out. So they can go either way, which is really a big advantage. Gwen, could you tell us how many ounces of gold do they have? Are they looking in? How much were built into their feasibility study, which I believe is only the oxide portion of their deposit, right?
That's exactly right. Yeah. So the oxide part of the mine plan, which is what the mine plan is right now, is about 1.5 million ounces in the resource. So that's great. It supports a very solid mine plan as it is. But what they're currently doing is looking at a few optimization opportunities for that mine plan. And the big important one is the idea of incorporating an expansion into the sulfides, which sit just below, and which offer another 2.5 million ounces of gold. Mm-hmm. And it turns out the sulfide processing is not difficult. Some sulfides are harder than others, right? But this is actually a pretty easy sulfide. So the study isn't out yet, so I don't want to put the horse before the cart here, or the cart before the horse. Horses usually go before carts. But I expect that this sulfide expansion study to be a pretty seamless, not capital-intensive opportunity to expand this mine in its first few years of operation, and that would really has the potential to significantly increase Bomboré's annual output, and that would enhance its project economics. And importantly, that sulfide expansion, I think, is key to making Bomboré especially attractive to those mid-tiers and majors who are looking for high-margin, long-lived assets.
Yeah. All right. Well, they have a major structure, I know, that looks pretty attractive if they can make it work. All right. Well, that's really a good story. I've known about it. I guess Burkina Faso is the one issue that sort of kept me away from it in a way. I mean, there's always the political risk. What are your thoughts about that?
Oh, for sure. I mean, Burkina Faso, I get asked that question all the time. I know the team gets asked that question all the time. Absolutely. Sure. And it's a very valid question. I would say, first of all, Burkina Faso is rich with gold, so that's not a question. But it is a more functional mining jurisdiction than you would perhaps initially guess. Mm-hmm. For instance, 11 mines have been built in that country in the last 10 years, and there's 2 more that are under construction right now. So the northern sort of third of Burkina Faso is where there is conflict and where things are disrupted. But the center and south of the country is very functional, and there are not those same risks present there. And Bomboré is smack in the middle of the country. It's only, I don't remember the exact distance. It's something like 100 kilometers from the capital city. It's not in a risky part of the country. And again, this team has a lot of expertise operating in countries of this ilk. So those risks are certainly addressed within this story.
Okay, no doubt those factors are priced into the shares as well. So, all right, let's move along here. I'm realizing we're going to run out of time before I know what's happening. Skeena Resources, trading it in Canada. This is one that I have on my list. SKREF in the U.S., SKE in Canada, 103 million shares, 46 cents. It's moved up nicely so far this year. I suppose about the time you started telling your subscribers about it, Gwen. It's at 46 cents and the market cap of $47 million or so. They have 2 very high-grade former producing gold mines in British Columbia's Golden Triangle, the Snip Mine and the SK Creek Mine. Tell us about the story there.
Yeah, I mean, I've been talking about how I like projects that I'm describing as strong and splashy. So by that, what I mean is projects that are strong because they have a good defined resource that's advancing towards production, but they also have this potential to generate splash through exciting drill results or discoveries on new zones or strategic investments or something like that. So they've got both aspects of what the market loves. And I think Skeena is a great example of that strong and splashy. So both projects that you mentioned, Snip and SK Creek, like you say, both famous projects, especially Eskay Creek. I mean, this is a mine that produced over 3 million ounces of gold, 160 million ounces of silver from rock that was just phenomenally high grade, like 45 grams per ton gold, ounce and a half stuff. But first of all, they left a lot of gold behind because their cutoffs were really high, the previous miners. And also, that initial mining effort was from a rock type, a mudstone that also had a good number of nasties in it, like arsenic. So Skeena went back and they've delineated another 3 million ounces of gold and 70 million ounces of silver. And a lot of that resource is in a different rock type that doesn't have those contaminants, but most of it sits in open pit shells. So you're talking about a resource that averages something like 6 grams per ton gold, and it's shaping up into a high-grade, open, pitable deposit. So that is sort of the definition of strong, right? And we'll get clarity on exactly that later this year, because Skeena is targeting an initial PEA on the project later this year. So I think that is going to be exciting. And then the splash could come from drilling, because we're talking about a deposit that, like I say, has demonstrated incredible mineralization in the past and recently. And so from stepping out close to the deposit, from infill drilling the deposit, from testing some new zones, I really think there's the opportunity for Skeena to generate some attention-grabbing drill results that would be the sort of splash aspect of this of the strong and splash.
What is the timing, Gwen, do you think, for the SNP and for the Eskay Creek? I mean, how far away are we from some kind of a production, and how far will this company be able to take it themselves?
Those are good questions for sure. So they're both a long way from any kind of production. We're both, with Eskay, we're just about to produce the initial idea of a mine plan, and with SNP, we're even farther back than that. This is not a team that is designing to build a mine, but this is a team that is demonstrating that there's a huge opportunity here to build a mine. So they're focused on exploration. They have a really strong geologic team, and they have a very savvy capital markets team, I would say, too. This company has demonstrated an ability to access capital in really tough markets. I'd say a good example of that, you mentioned how the share price has been rising nicely in the last little while. That happened. That almost kick-started when Skeena announced the financing. Most exploration companies these days, if they announce the financing, their share price slides.
Goes down. Yeah.
Skeena, there were so many people who wanted into the financing, even though it didn't have a warrant, that they couldn't accommodate them all, and so people were buying in the market instead. So this is a team that's really able to understand the capital markets, get people excited about the story, and I think that's showing in the share price. And with these two assets that can generate splashy results and that have good fundamental strength and that are moving, taking steps towards production, I think it's a kind of story that has the characteristics that the market really likes these days.
All right, let's go to the final one. Quebec Precious Metals trades in Canada CJC. In the U.S., you can buy it under CJCFF. 45 million shares, 23 cents a share, market cap of only around $10 million in Canadian money. So they're operating in the James Bay Area of Quebec. Gold Corp, I believe, is a strategic investor there. Its flagship property, this Sakami. And I guess there's ongoing drilling there now, Gwen. Is there? And just tell us, what can we look forward to with this one? This is an earlier stage story than the other two, obviously.
Absolutely. I would describe Sakami, the project, as sort of an advanced discovery asset. So Quebec Precious Metals is still a pretty new company. It was born of a three-way merger less than a year ago to focus on this project. What I want to note is the discovery is pretty big already. It's already had a lot of holes into it, and those holes have delineated a pretty large zone. So I think Quebec Precious Metals is going to come out the gate with a resource sometime later this year that's bigger than 2 million ounces. That alone is going to attract attention as an initial resource. Second, the grades are really good. So not only will the resource be big, I think it will average 3, 4, maybe better than 4 grams per ton gold. So a large, high-grade resource just down the road from the Eleanor mine. So Gold Corp, now Newmont Gold Corp, of course, owns and operates Eleanor, less than 100 kilometers away. It needs more ore. That's why Gold Corp made a strategic investment into Quebec Precious Metals, because the new developing gold zone at Sakami and the very well-known mineralization, well-understood mineralization at Eleanor look almost identical. So this is an exploration play, but it's advanced and it's really interesting, but it's not very well known yet because it's new. The team hasn't needed to raise money since its debut because it got that strategic investment from Goldcorp. And you mentioned only has 45 million shares out. Almost half of those sit with Goldcorp management and a few long-term Quebec institutions. So it's also a very tight share structure. So we're looking at drill results, a resource estimate that I think is going to surprise the market with its scale and grade, a tight share structure, a likely buyer right next door. For an exploration play, I think Quebec Precious Metals has a lot to offer.
Is this a near surface deposit?
Yeah, it starts right at surface. It's a fairly steeply dipping overturned lens, and so a fair chunk of it would fit into an open pit. That's, since we don't even have a resource estimate yet, it's a bit early to talk about these things, but it certainly starts at surface, strikes for a long way along surface. So yeah, it's not a deep situation. All
right. Well, that sounds really good. Very low market cap. People don't know about it yet. The buyer next door. Yeah, all those things sounds pretty attractive. Gwen, thank you so much for spending your time telling us about these stories.
The opportunity. Yeah.
Really great, and it'd be great to see you up there in Vancouver and hear what else you have to say in Vancouver, 24th and 25th of this month.